Have you ever wondered how to make money online with Forex trading? Well, if you've been asking yourself that question, you're in the right place. Today we're going to delve into the intriguing world of Forex trading, specifically focusing on the NAS100. We'll discuss the best strategy for small accounts and detail the entry and exit methods. Forex trading, or foreign exchange trading, is a global marketplace where individuals, businesses, and financial institutions exchange one currency for another. The Forex market is the largest financial market globally, with a daily turnover of over $5 trillion. Step 1 is understanding the market. The NAS100 is not a currency pair, but an index comprising 100 of the largest domestic and international non-financial companies listed on the Nasdaq stock market based on market capitalization. Step 2 involves choosing the right broker. This is a critical step as a good broker provides a secure trading environment, advanced trading tools, and comprehensive education resources. See the link in the description for a great broker that offer many assets to trade and great spreads. Step 3 is about setting up a trading plan. This is essentially your roadmap to success, outlining your financial goals, risk tolerance, and trading strategy. Step 4 is all about market analysis. This involves studying the market conditions and using technical and fundamental analysis tools to predict future price movements. For market analysis, use the link below in the description for a great tool for charting all assets. Step 5 is where the action begins, placing your trades. This involves deciding on your entry and exit points. For small accounts, the best strategy is to trade conservatively, focusing on risk management. The entry method is crucial as it determines the price level at which you enter the market. One effective entry method is to wait for a breakout above resistance or below support levels. I use the midpoints of fair value gaps for entry. Stop loss should always be used. I generally place mine above or below the fair value gap depending on the directional bias of the trade, that is bullish or bearish. The exit method, on the other hand, is when you decide to close your trade. A common exit strategy is to set a stop loss order, which automatically closes your trade when the market price reaches a certain level. My favorite exit is at an old high or old low again, depending on bullish or bearish trade. Finally, step 6 is about reviewing and refining your strategy. This involves analyzing your trading performance, identifying areas of improvement, and making necessary adjustments to your trading plan. In summary, Forex trading involves understanding the market, choosing the right broker, setting up a trading plan, analyzing the market, placing trades, and continuously refining your strategy. Remember, trading the NAS100 with a small account requires a conservative approach with a keen focus on risk management. The entry and exit methods are crucial components of your trading strategy, influencing your overall trading performance. However, it's important to note that Forex trading involves significant risk, and it's not suitable for everyone. It requires careful planning, ongoing education, and disciplined risk management. So the next time you think about making money online, consider Forex trading. With the right strategy and mindset, it could be the opportunity you've been waiting for. Remember, every successful trader started somewhere. And with the right knowledge and tools, you could be next.